Welcome to Trading Nation. I'm Brian Sullivan. Stocks across the globe are surging. The MSCI World Index now on its longest streak ever without a 5% pullback. That according to a new note from Goldman Sachs. What to do about it? Gina Sanchez, Chantico Global, Morganlander, Washington Crossing Advisors. Not just Gina, a U.S. story. I mean, stocks everywhere, central bank buying almost everywhere, by the way, are both on the rise. What to make of it? Do you think the globe has more to go?
Well, I think the globe definitely is a big part of this. 50% of the MSCI world is the U.S., and that really has to do with general optimism. But if you look at the global story, global trade has been expanding all through last year, and it's continuing to expand at the beginning of this year. And that's actually driving a story around emerging markets and the potential for more out of that area. Now, that's only 15% of this total story, but you also have Japan, you have Europe that are both hanging in there. And so this is a broad story about the recovery of the economy that has been long in the making.
Chad, though, are you investing in and around it, though? I mean, the idea is to make money off this. Seems like a lot of money has already been made. Is there more to be made?
So I believe there is a bit more to be made. Long-term forecasted returns that we work through roughly on the S&P 500 is roughly between 5 and 6%. That's looking at the next 3 to 5 years out. In the short run for Q1, everything looks positive. Credit trends look positive. U.S. economic trends okay, as well as global trends. Valuation does matter. So I do agree that multiples, sales, price to sales on the S&P, as well as market cap to GDP is overextended. And critical drivers is global growth, earnings, revenue growth. Monetary policy, though, could actually be the fly in the ointment in the later half of 2018. As the Fed starts to raise interest rates and we get to that 2.5 range on Fed funds, the 2 and the 10-year look a little more attractive than the long-term forecasted return for the S&P 500. So we're overweight equities in the short run right now, but we would be somewhat more cautious in the long run.
Back one more to Gina. Gina, I know you travel extensively. You come to us from all parts of the world. Are people this bullish everywhere around the world or just here in the States?
No, this is a broad sentiment. I mean, there's a lot of things happening and so much headline risk happening every single day. But broadly speaking, this is a trend that people are celebrating in emerging markets. We're seeing oil continue to be supportive. We're seeing trade volumes continue. We're actually overweight emerging markets. But if you look, I do think valuations matter. And if you look at sort of where the real opportunities are, right now they're not in the U.S. They are abroad. And so we're actually we're rooting for the rest of the world right now.
Rooting for the rest of the world. Gina and Chad, thank you both very much. Really interesting global time for the equity markets. Folks, thanks as always for watching Trading Nation. I'm Brian Sullivan. Until next time, take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.